Welcome back. Well, let's talk about one particular company. OneSource Specialty is the next management that we're speaking to. The company has reported what was a weak set of earnings, especially on a Q-on-Q basis, with the revenue declining 23% sequentially. The margins also declined this time round, but the operating expense has also come down Q-on-Q. To talk more about this, we have the managing director of the company, Neeraj Sharma. Mr. Sharma, thanks very much for taking the time out. If you could just take our viewers through why there was a sequential dip, and quite a sharp dip you'd have to say, in terms of the numbers this time.
Yeah, thank you, Vinnii. Thank you for having me over. As we have said last time, also when I came in here, that FY26 for us is a transition year. You see, FY25, our principal business of drug-device combinations, was primarily based, the revenues were primarily based on the service fee which we get. And from FY27 onwards, this business will be giving revenues primarily from commercial sales. So this is the year FY26, which is a year in transition, where we'll be actually moving from the service, the pre-approval service fee to a commercial in the second half. And that's how, we have said that our first half will be heavy, where we'll be doing, executing our MSAs. And the second half is the one where the commercial revenue will start flowing, and that will be heavy. So, keeping that in mind, our first quarter performance has been as per our expectations. If you see how we have grown quite significantly versus last year. So the year-on-year growth, whether in revenue or in EBITDA, has been very significant. And as you progress in the next few quarters, you will see that with the commercial launches happening in H2, we'll have a significant H2.
Okay. When you say a significant second half, it is going to be based on your drug delivery devices, what you are going to be supplying for GLP-1s. Just quantify how much can we probably expect towards the end of this fiscal in terms of what the commercial orders could be for OneSource.
Yeah, so I think we have again mentioned that we are very fortunate to be working with some of the largest companies in the generic field, the global players, the regional leaders, country leaders. So we have a very strong customer base here, and these are all looking at launching in the markets which are coming off patent, whether it's Canada or Brazil, at the time of market formation. So what today we are sitting on actually is purchase orders from them. In fact, what has also happened, Vinnii, that over the last couple of months, all our customers who are actually going to be entering the market at the time of patent expiry have actually been increasing their forecasts for launch. In fact, based upon the fact that we have all these customers on take or pay contracts, we have actually taken the leap, and actually we are advancing our capex program actually, whereby significant increase in our capacity, which was actually earlier supposed to happen in FY28. We are bringing it a year ahead, FY27. So, keeping all this in mind, we see that, our customers will be launching on time, assuming they get approvals. And B, we are reiterating also our midterm growth aspiration, which we have set to be a 400 million revenue company basis organic growth with a 40% plus EBITDA margins. And a significant part of it will be
Mr. Sharma, actually, you preempted the question around 400 million and 40% EBITDA margins. You spoke about medium term. What we want to understand is, how do you define that medium term? Do we see that number coming by, say, FY29, FY30? And if FY26 is, a transition year, then what's the glide path to that? Do we see a big jump in FY27 over FY26?
Yeah, so the aspiration which we mentioned, the guidance which we have clearly said is actually FY28 numbers on an organic basis. So it's a fairly, fairly next to 2 to 3 years is a time horizon which we are saying FY28. That's the guidance. And FY27 is the year where we actually, the commercial revenues full year will be there. So it's going to be a jump, definitely. But as you see, moving from roughly about 172 million, which we did FY25, to about 400 million organically in FY28, that's how the transition is going to be. FY27 full year commercial, and then FY28 again ramping up further.
Right. Mr. Sharma, two-part question coming in for Semaglutide. One is the Delhi High Court has restrained Dr. Reddy's as well as OneSource from selling Semaglutide in the domestic market. What's the update on that front? Also, we had comments that came in from Sandoz this morning as well, saying that, in Canada, they would launch Semaglutide at 60-70% at a discount or, price cuts versus what it's sold at. Do you think, now Semaglutide may not be as lucrative, both these parts?
So I think on the first part, Ekta, unfortunately, as you know, it's a matter which is sub judice. I won't be able to say much other than the fact that we are very much allowed to manufacture the product as we speak and sell in the markets where the patent is not there. To what you highlighted, what the CEO of Sandoz has said. I think that's a question better posed to our customers, because today we are manufacturing based upon our customers' forecasts. And I can tell you, basis the increased forecast which we have from all our customers are very bullish. Our customers are very bullish to launch in these markets, whether it's Canada or other markets which are opening up. And that bullishness has been continuing. And as I mentioned earlier, that thanks to that bullishness, we are actually even advancing our capex program just to ensure that we fulfill the demand which our customers are putting on us.
But you're not just supplying Semaglutide. You are also supplying for other GLP-1 drugs.
Absolutely. So we have actually our strength is in drug device combinations.
So would that include Eli Lilly as well?
As of now, as I said, we are a very, very strong player in the generic space in GLP-1s, which are already in the market. And going forward, as we speak, we are engaged with the companies who are actually going to come up with the next wave of GLP-1s, innovators who are going to come in the next wave. So as you know, there are multiple candidates in this space. This is such a attractive and revolutionary space that there are many, many candidates. And we are engaged right now with some of the innovators who will be coming in the next wave.
Okay, all right. More on that soon, Mr. Sharma, once we get more clarity in terms of a couple of these contracts. Thanks very much for joining in and speaking with us and giving us your perspective on OneSource specialty. So the next leg of growth will probably come from GLP-1. FY26 is expected to be lumpy, but FY28, they're sticking with their guidance of $400 million with 40% margins, and that would be based on the supply of a lot of these devices which are used to give GLP-1 drugs to patients. Well, we need to take a short break on that note, but we'll get you a lot more on stocks once we're back. Stay tuned.